Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst, a part of MarketSmith India team. Before we go ahead into this podcast, I would like to state the disclaimer for this podcast. Whatever stocks we discuss in this presentation are intended only for educational purpose, should not be taken as an investment advice. This is a Nifty's daily chart taken from our website, MarketSmith India. You can see the last two sessions, the last three sessions, to be specific, you can see Nifty has been trying to edge higher, but on the closing basis, it is closing in the lower half of the trading range. It happened in the last three occasions. Yesterday was also similar. Yesterday, if you see price action, specifically Nifty traded above 18,000 level for a small bit of period, but it quickly came under selling and it closed as the session progressed. It closed near the day's low, which is not a good sign for the longs. Ideally, we would want the Nifty to close in the higher off and continue to edge higher, but Nifty is not finding proper buying, which is needed for the Nifty to rally higher. Um, you can also see Nifty breached its 100 DMA, and it has been finding resistance at its 50 DMA, which is the red line here. Pink line is the 100 DMA. Yesterday, Nifty closed slightly above its 21 DMA, which is a green line here. And we would like the Nifty to hold these levels, and going forward, these levels, which are very close and nearby, near 18,000 levels, the Nifty reclaims these three levels, 50 and 100 DMS. There won't be major resistance going forward, but until then, these levels will definitely act as a resistance. So it is very difficult for the Nifty to only if the institutions come in, and if the huge volume of buying comes in, then only we will see these levels to be reclaimed. On the volume front, if you see, Nifty has been not finding proper volume. There is no major activity happening in the market. After budget day, you can see that volumes have been coming lower drastically, and in the last 1 week or more, Nifty volume stayed below its 50-day average volume, which is not a proper sign. On the O'Neill front, we are in a rally attempt. We have been waiting for the market to give a follow-through day, which signifies market in a rally. However, Nifty reclaiming its 100 EMA was a very crucial sign. So we have turned on the buy switch, and we have added a few stocks to model portfolio as well, and we'll continue to add stocks which are very resilient and which are giving very strong buy points, and which are also fundamentally strong companies. We'll be very cautious, and we'll be very selective in our stocks which will be added to portfolio. However, if the market gives a follow through date, then the probability of successful breakouts will be higher. So definitely, if the FTD happens, then the breakout will be more, and the successful breakouts will be more, and the model portfolio return will definitely outperform the benchmark index. Some of the key stocks which are in news and which will be under radar in the today's trading session are JK Tyres is planning to raise nearly 240 crores by issuing compulsory convertible debentures to international finance corporations. These debentures will have an interest rate of 6% per annum, and these interest will be added to the principal and compounded on quarterly basis. And as these are compulsorily convertible debentures, the company will convert these debentures into equity shares at a share price of 180 rupees per share. Another news is that GR Infraprojects emerged as an L1 bidder, lowest bidder in two projects which are in Uttarakhand. This is on hybrid annuity mode. The projects are worth 1,800 and nearly 1,800 crores each project. So definitely, it's a positive sign for GR infra projects. We might see good action happening in this stock. BPCL is planning to raise 300 crores in the current financial year FY23, which is going to end in the next month. So on the private placement basis. is planning to raise these funds by issuing unsecured non-convertible debentures. This is also subject to market conditions. NHPC has raised nearly 1,000 crores by issuing unsecured debentures, which are also taxable with an interest rate of 7.6% on a private placement basis. Talking about global markets update, yesterday global markets, majorly US market was closed because of presidential day, which was happened on the Monday yesterday. So there was no action on the US market yesterday, but Asian markets, you can see there is no major action happening. Most of the three indices which we track, Shanghai, Kospi, Nikkei are trading with flat to positive bias, whereas Nikkei is trading slightly on the lower end. So there are no major cues on either side. So SGX Nifty is also indicating a no major opening. We might see a flat opening near 8,000, 70,800 and 850 levels. As long as Nifty stays below 18,000 level, we might not see a higher. We might not see a strong buying happening. But if the 18,000 level is reclaimed, then we might see a surge in index and broader indices as well. Also, today is a Tuesday, that is expiry of Nifty Financial Services. So that might also bring in volatility into the index in the today's trading session, especially in the financial related stocks. For the chart of the day, we have picked the Rolex Rings, which is also included in our buy watch list. We like the story, and the company is involved in forging and manufacturing of pairings and other related articles. Currently, the stock is forming a long cup base pattern, and it is almost 10% to its pivot. As long as the Nifty reclaims 18,000 level, then we might see good action happening in the stock. The 10% overhead supply is also reclaimed, then there won't be any resistance for the stock. Then a good buying might be happening in this particular stock. And ratings wise, we like the story. EPS of 99 indicates a very strong fundamental company. You can see the company has reported very good set of numbers in the last quarters as well. I can see growth rate on EPS and sales spend has been growing at more than double-digit growth rate. Number of funds, which is another key parameter we look into, is also very good. You can see number of funds have been increasing on a quarter-on-quarter basis. So overall, on volume front and on the price action front, we like the story. That is the reason we have included in the buy watch list. We are not advising a fresh entry into this stock at this particular point, but if you have this stock in your portfolio, you can keep its 100 EMA, which is the pink line, as a stop loss, and you continue to hold it. Thanks for joining today's pre-bell. Have a good trading session.